Tata Motors, one of the biggest names in the auto world, just dropped some numbers that, well, they've got people talking, and not in a good way. In this explainer, we're going to break down their really tough first quarter, figure out what this massive geopolitical storm was that came out of nowhere and hammered their most profitable division, and see if their huge bet on electric cars is the thing that's going to get them through it all. Let's dive in.
So what on earth happened here? I mean, this wasn't just a little speed bump. One of their own execs described it as facing, and I quote, multiple challenges of a scale, a speed, and sometimes an unpredictability that can't immediately just be absorbed. So what does that actually mean for a company this big? Let's find out.
All right, first things first, let's look at the numbers. This is where we really start to see just how strong those headwinds were.
And wow, these numbers really tell a story, don't they? Wholesales, that's just how many cars they're shipping out to dealers, dropped by over 9%. Revenues are down 2.5%, and that EBITDA margin, which is a super important look at how profitable the core business is, it fell by 480 basis points. That's a huge 4.8% drop. You know, no matter how you slice it, that is a rough start to the year.
Okay, but here's the main event. The single biggest culprit for this whole mess wasn't just that people were buying fewer cars. No, it was something much bigger. A massive, kind of out-of-the-blue geopolitical shock that hit their crown jewel, Jaguar Land Rover.
254 million pounds. Just look at that number. That is the direct hit to profit JLR took this quarter because of new, really painful U.S. tariffs. To put that in perspective for you, a single political decision basically vaporized almost 4% of their operating profit margin. Just gone.
And you don't have to take my word for it. This quote from JLR's chief financial officer says it all. This wasn't some normal business problem you could plan for. It was fast, it was huge, and it was, as he says, unpredictable.
Now check this out, because this slide really breaks it all down. So JLR started last year's Q1 with a healthy profit of 693 million pounds. Then, wham! Look at that biggest red bar right there. That's our culprit, that 254 million pound hit from the new tariffs. You throw in a weaker dollar and some other costs, and bam, their profit before tax gets sliced almost in half. It's crazy to see how much one single event can change everything.
But the storm wasn't just brewing overseas. Nope. Back on their home turf in India, Tata was dealing with a totally different kind of headache in their passenger car business.
See, it's like the Indian car market has split into two completely different worlds right now. The cheaper cars, the ones under 10 lakh rupees, that part of the market is slowing down. There's tons of competition, lots of discounts. But if you look at the more expensive cars, over 10 lakh, demand is still pretty strong. And guess where Tata's a huge player? Yep, right in that tougher, more affordable segment that's getting squeezed.
So you're getting hit by tariffs from abroad and a slowdown at home. What do? Well, you don't just sit there. You go on the counteroffensive. And for Tata, that means new cars and a massive push into electric vehicles.
And the star of this whole comeback plan is the brand new Harrier EV. The company is literally calling its launch a blockbuster. And honestly, they've got a point. This thing is designed to be a total game changer, not just for them, but for the entire EV scene in India. 10,000. Let that sink in for a second. That is how many people put money down for a Harrier EV on the very first day it was available. That is a massive signal from the market that they've built something people really, really want.
So what's the secret sauce? Why is it such a hit? Well, from what the leadership is saying, it basically nails everything. It performs better than its rivals, both gas and electric. It's loaded with cool new tech. It absolutely crushes that range anxiety fear, with a real-world range of 500 kilometers. And here's the kicker. It does all of that at a price that's right there with a regular gasoline car. That's huge.
And they're not stopping there. It's not just about one amazing new car. Tata also rolled out a lifetime warranty on their EV batteries. Think about that for a second. That move alone gave a huge shot of confidence to buyers, and suddenly, sales for their other EVs, like the Nexon, started jumping. So you see, it's not just about selling cars. They're building trust in the whole EV idea.
Now, with all this drama going on with JLR and the passenger cars, you might think the whole company's in trouble. But there's an unsung hero in this story, the quiet, steady anchor of the business, the commercial vehicle division. And you can see that strength right here in the numbers. Even though they sold fewer trucks and vans, the commercial business delivered a super strong profit margin of over 12%. And look at that return on capital, almost 40%. This is the part of the company that's just a steady, reliable moneymaker, and it's what's holding everything down in this stormy quarter.
Okay, so we've seen the perfect storm of tariffs and slowdowns, and we've seen the electric counterattack. So what's the game plan now? What does the road ahead actually look like?
Well, they've laid out a pretty clear four-step plan. First step, for JLR, they have to manage pricing and costs to try and absorb those tariffs. Second, back in India, they're going to push hard with new models and big marketing for the festive season to get people buying again. Third, and this is the big one, they're doubling down on EVs, using the Harrier's buzz and that battery warranty to really dominate the market. And finally, they're just going to focus on executing perfectly on the things they can actually control.
And that really leaves us with the big question, doesn't it? Tata Motors is sailing through this perfect storm of global politics and a tricky home market. Their big answer is to bet heavily on an electric future, with this incredible new car leading the charge. But is that powerful new engine going to be enough to steer this massive company back into the fast lane? We are definitely going to have to watch and see.